Okay, so moving on, let's talk about how to analyze a stock. So there are two main ways to analyze a stock: fundamental analysis and technical analysis. So you can think of it as this way, right? Fundamental analysis tells you what to buy. Technical analysis tells you when to buy. Okay, so for now we are focusing on the fundamental aspect. Don't worry, we will discuss about technical analysis in the later videos, but for now, let's begin with fundamental, shall we? So when you talk about fundamental analysis, right, it can be broken down into two categories: qualitative fundamentals and quantitative fundamentals. So here's the thing about fundamentals, right? What you're trying to do is to gather insights, information, right? Maybe from the economy, from the financial statements, from the company itself, to derive an intrinsic value for the company, right? This is what fundamental analysts try to do, right? To derive an intrinsic value of the company. And then if the stock price drops below the intrinsic value, you buy. If the stock price is above the intrinsic value, you sell, right? That pretty much, right, sums up the role of someone, right, trying to, use fundamental analysis in their investment or in their trading. So again, as mentioned, right, there are two broad ways to do fundamental analysis: qualitative fundamental analysis and quantitative fundamental analysis. So let's have a look at them, right, in more details. So when you talk about qualitative fundamental analysis, right, these are fundamentals, or rather information that can't be quantified. For example, disruption, right, that we are experiencing right now. This is qualitative analysis that can't be quantified. Like for example, let me give you an example. Let's say I have an oil company right now. I'm profit, right, as I send my guys to dig up oil from the earth. Let's say there is this new uh, commodity that can replace oil. Maybe there is a less hazard. Okay, it's cheaper and it can replace oil, right, in vehicles, in machinery and stuff like that. So when this new commodity comes to the market, okay, you can see that my business is going to suffer because nobody needs oil anymore. My stock price is going to collapse. So how do you actually, so-called quantify this? You can't, right? So this is why we call it qualitative analysis. This is an insight, right, that someone can glean from, right, and realize that this would be disruptive to the oil stock. So maybe they might want to sell the stock or even short the stocks altogether. So this is an example of qualitative fundamental analysis. Another one could be economic mode, right? Like what Warren Buffett is a term that I think Warren Buffett came up with, an economic mode. So for example, Coca-Cola, they have a strong economic mode. They sell soda, they sell cola, but if you want to challenge against them, can be pretty darn difficult, right? Because they have the brand, they have the reputation, they've been in business for a long time. So they have a strong economic mode. All right. And this is another aspect of qualitative analysis. You can't really quantify what this economic mode is. You know what it is, right? It's their branding, their trust. They have been in business for a long time and the recipe is pretty much, kept somewhere as a secret. So that is an economic mode, and that's another way of, looking at qualitative analysis. Or even management. It can be, a qualitative aspect as well. Maybe a good management, a good CEO comes in to, improve on things, improve on the operations, reduce expense, gain new market share in different industry or sectors, for example. All this is what we call qualitative analysis. Things that cannot be quantified in numbers. And moving on, we have something what we call quantitative analysis. So this is fundamentals that can be quantified. Stuff like, your assets. You know what your assets are? Your machinery, you can quantify all those. You can put a value on those assets. Your liabilities, right? Your revenue, your earnings, your cash flow. These are all stuff that can be quantified. And this is why we call it a quantitative analysis. So when you deal with quantitative analysis, you will see ratios like, your PE ratio, your price to earnings ratio, your PB ratio, price to book value, price to cash flow, and etc. So this is what we mean by quantitative analysis. So as a recap, right, there are two types of analysis: qualitative and quantitative. And I just want to talk a little bit now about the pros and cons between both of this approach. So for qualitative fundamental analysis, right, the pros of it is that if you can so-called digest information, you can make sense of what's going on in the world, in the company, you can gain insight that not many traders or investors will see, and you can actually make a profit, right, because you can actually buy a stock below its intrinsic value. So that's the good thing about qualitative analysis. The downside to it is that it is difficult, I'll be honest, right? Because there is so much information out there. How do you know what's relevant to the market at this current point in time? So you will get analysis paralysis analysis paralysis. There's so much information, you do not know which are stuff that you should focus on or which are stuff that is noise in the market. So, those are the pros and cons for qualitative analysis. Quantitative analysis, again, the pros is that it can be quantified. You can actually use quantified data and backtest and see whether, that data actually yields you a market beating return in the long run. For example, right, it's proven that value stocks, right, stocks that have a low price to book value, they tend to outperform the market. Okay, so this means if you rank the stocks between those with the highest book value and those with the lowest book value, right? If you buy the top 10 worst stocks, right, with the lowest price to book value, they tend to outperform over the next few years. Compared to stocks with high price to book value, they tend to underperform the market over the next few years. So you can see that quantitative analysis, the good thing is it can be quantified and can give you an edge in the market. So you don't really need to know or have great insights into a company, because using raw price data, you can actually know what works and what don't. The downside to quantitative analysis, again, similar to qualitative, is that sometimes there's just so much information and it's very hard to filter out what are the stuff out there that matters and what don't matters. Okay, so again, if you ask me, right, qualitative or quantitative, I won't say there's right or wrong, but I do know that quantitative fundamental analysis, you can do backtest on it and you can know, right, which are the key metrics, right, that are worth paying attention to. So this is just my take between qualitative and quantitative analysis. All right. Okay, so now let's talk about what are some of the fundamental metrics that you should pay attention to as a trader. So based on studying momentum stock traders, and also if you've read the book How to Make Money in Stocks by William J. O'Neill, you know that stock traders, they like to focus on earnings and net income. Why is that? Okay, so as mentioned earlier, when you look at qualitative fundamental analysis, right, most stock traders, they just don't have the skill to analyze the company to know what is the noise and what is the signal. But one thing that they can do to shortcut, right, their so-called screening process is by looking at earnings and net income. Why? If you think about this, right, a company that's about to disrupt a sector, let's say, again, back to the example where there is this new element or material that can replace oil. If it comes into the market and nobody buys oil anymore and buys this new element because it's cheaper, it's better, and it's more efficient, and it doesn't contribute to global warming, you can be sure that people will flock to whichever company that's producing, let's call it element X, and this company will make money, right? Their earnings will increase because they are selling or mining for a lot of this new element X. Earnings will increase, net income will increase, right, if they are able to keep their operation costs low. So you can see that earnings and net incomes would reflect the fundamental of a company, right? That maybe they are a new innovator, they are coming up with something new in the market that is in demand, right? So that's one example. Another example could be, let's say, a company has been in decline. Maybe it lost its competitive edge, right? It has dropped 90%, right? The stock price has dropped 90% from the highs. And then new management comes in. This new management starts to, shake things up, right? It fire off the, underperforming workers. It removes underperforming assets and focus on the stuff that is bringing in revenue and focus on stuff that actually, helps the company get back its edge and to help the company grow. Now, from a qualitative perspective, it can be quite difficult to determine whether that new management, the new CEO who comes in, is able to turn things around. But one thing that don't lie is the earnings and net income. Okay, if it comes in and earnings starts to improve, net income starts to improve, quarter on quarter, year on year, you can be sure that, clearly the management is doing something right. So when you see earnings is improving, net income is improving, chances are, I'm not saying guarantee because there's many cases of fraud, right? But chances are the fundamentals of the company is, doing okay as well. It could be even a turnaround or a new innovation in the company. And whatever the case is, right, as a stock trader, if you want to, buy stocks, right, you want to focus on stocks that have improved earnings and net income, because this tells you, right, there's a good chance that the fundamentals in the company is pretty alright, it's pretty good even. Okay, so earnings and net income is what many stock traders, they pay attention to. They pay attention to how the earnings have increased quarter on quarter, or how the earnings have increased year on year, right? Both earnings and net income. So this, for you, a stock trader, this is something that you want to pay attention to. Okay?